President Donald Trump issued a strong warning to the European Union on Friday, announcing his intention to impose a 50% tariff on EU goods due to stalled trade negotiations. In a post on his social media platform, Trump cited a range of issues, including trade barriers, VAT taxes, corporate penalties, currency manipulation, and what he described as unfair lawsuits against American businesses, as contributing to an annual U.S. trade deficit with the EU exceeding $250 billion. He called the situation totally unacceptable and declared that talks with the bloc were making no progress. "Our discussions with them are going nowhere," Trump said. "So I'm recommending a straight 50% tariff on the European Union, starting June 1st, 2025. Later in the day, during a signing event at the White House, Trump reaffirmed his stance, saying, "I'm not looking for a deal. We've set the deal. It's at 50%. However, he suggested he may consider limited flexibility on the deadline for companies interested in investing in U.S.-based manufacturing, stating, "If somebody comes in and wants to build a plant here, I can talk to them about a little bit of a delay." Following a call with the U.S. Trade Representative and Commerce Secretary, the European Commissioner for Trade emphasized the need for mutual respect and warned against using threats as a negotiation tactic. He added that the EU remains committed to reaching an agreement that benefits both sides and is prepared to defend its interests if necessary. Shortly after Trump's statement, the U.S. Treasury Secretary remarked in a television interview that the EU's recent trade proposals have fallen short compared to those from other key partners. He noted that the EU appears to have difficulty reaching consensus among its members and expressed hope that Trump's tariff threat would serve as a wake-up call. The announcement rattled markets across Europe. Key stock indexes fell sharply, with Germany's DAX dropping 2.4%, France's CAC down 2.2%, and the Stoxx 600 shedding 1.7%. London's FTSE declined by 1%. In the U.S., markets also opened lower, with the Dow sliding 480 points, or 1.15%. Losses eased somewhat after the Treasury Secretary suggested further talks with Chinese officials were planned to resume trade discussions. The proposed tariff on the EU is more than twice the size of a previous 20% reciprocal tariff that had briefly gone into effect in April before being paused to allow negotiations to continue. That pause is scheduled to end on July 9th. Since then, the only major trade agreement finalized has been with the United Kingdom. While the Treasury Secretary declined to name which country might be next to finalize a deal with the U.S., he mentioned that negotiations with India were progressing well and several Asian nations had offered favorable terms. He emphasized that out of 18 significant trade partners, most, excluding the EU, are negotiating in good faith. He also predicted that several large agreements could be announced in the coming weeks. President Trump continues to voice strong opposition to what he calls non-monetary trade barriers, a category he frequently cites as a key issue in global trade imbalances. His latest comments sharpen criticism against nations and blocs that maintain persistent trade deficits with the U.S., a concern he's consistently raised during negotiations. According to the U.S. Commerce Department, the country recorded a $236 billion trade deficit with the European Union last year, an amount even higher than Trump referenced in recent remarks. Much of his frustration is centered on EU tax policies, including value-added taxes, VATs, and digital service taxes, DSTs, which he argues place American businesses at a disadvantage. VATs are consumption-based levies that apply to each stage of a product's production and distribution. When goods are exported from the EU to the U.S., these taxes are typically refunded, but American exports to Europe are subject to VAT charges upon entry, something Trump argues amounts to unfair treatment. DSTs are another point of contention. These taxes apply to the total revenue digital companies earn from providing services to users, regardless of their profitability. That means income from advertising, data sales, subscriptions, and software services are all subject to taxation. U.S.-based tech giants such as Meta, Apple, Google, Amazon, and Microsoft are disproportionately affected by these policies, as noted in a previous government report. Earlier this month, the European Union warned that it had prepared a $108 billion retaliatory tariff package targeting a wide range of industrial and agricultural goods in case negotiations with the U.S. collapse. In a statement issued May 8th, the European Commission emphasized its commitment to pursuing a balanced resolution, but made clear it would act if talks broke down. European Commission President Ursula von der Leyen reaffirmed that position, saying the EU had proposed a zero-for-zero tariff agreement and was still seeking common ground. But if and where negotiations fail, we also will act, she said. All instruments, all options stay on the table. Irish Prime Minister Michael Martin expressed disappointment over Trump's aggressive stance. In a statement posted Friday, he welcomed the existing pause in tariffs through early July and said he had hoped it would lead to a negotiated solution. He pushed back against recent comments from U.S. officials suggesting that the EU was not engaging in good faith, warning that sweeping tariffs could drive up prices and significantly harm one of the world's most vital trade relationships. French Trade Minister Laurent Saint-Martin also weighed in, saying such threats hinder the negotiation process. He reiterated France's preference for de-escalation, but noted that the EU is prepared to respond if necessary. Trump's renewed criticism came alongside a separate post threatening to impose a 25% tariff on Apple if the company continues producing iPhones overseas. The president met with Apple CEO Tim Cook earlier this week and also spoke with him during a recent trip to the Middle East. Treasury Secretary Scott Bessent confirmed he had spoken with Cook as well, describing their talks as positive. Still, the motivation behind Trump's sharp warning remains unclear. Apple has previously indicated plans to shift some iPhone production for the U.S. market from China to India to minimize tariff exposure. However, Trump has recently expressed dissatisfaction with the company's decision to manufacture devices outside the United States, reiterating his push for domestic production.